Hello students, now we are going to see January 4th week 2023 banking awareness. January 4th week means from Jan 23 to Jan 29 banking awareness news we are going to see. But before getting into the video, as usual, two important announcements. One is that after watching this video, there is a quiz link in the description box. Totally, you will be having 45 questions. It is a timer based quiz. Within 30 minutes, you have to attend it. So attend that quiz. So that will help you to revise the news article as well as that will help you to boost your score in the bank exams. Right. Another announcement is that this week's January 4th week 2023 banking awareness PDF. If you want to download the PDF link is also given in the description box. You can download it. Right. So let's move on. So as usual, same as every week in banking awareness, the topics which we are going to cover is banking news we will be covering, NBFC news for that week, January 4th week we will be covering, insurance news for the January 4th week we will be covering, then government finance news also will be covering under this banking awareness video, right? Let's begin. Jan 23, Monday, from Monday we can begin. First news, Yes Bank and the 81 bond saga, what's next for investors? So this news, previous week banking awareness also we have seen. Actually, what they have told is that this news article is a lengthy news article, but I will be telling it in a short manner. What is that? In 2020, Yes Bank defaulted. Yes Bank defaulted. So finally, RBI came to rescue the Yes Bank, and finally RBI changed the board members of the Yes Bank. They appointed Kotak Mahindra Bank MD, then HDFC Chairman MD, they have appointed the board members, and finally what RBI decided is, let us restructure the loan of the Yes Bank. Because Yes Bank would have got more fund from the public, right? More fund from the investors. Now they have defaulted it. What now RBI have to do is, they have to repay the amount which was got by the Yes Bank previously. They have to repay it. So for that purpose, RBI changed the board members, changed the management board, and RBI restructured the debt. They have changed the debt. They have changed the plan also. But after once RBI came to recover the Yes Bank in 2020, what RBI sees is that this Yes Bank have raised more amount through the 81 bonds. 81 bonds, Yes Bank have raised more amount. They have seen it. They have borrowed more amount from the investors using this 81 bonds. RBI came to know that in 2020. So what RBI thought is that, okay, right, let us write off this loan. So that's what the news is. Let us write off this loan. What RBI is saying is that, okay, right, we could not pay this much huge amount to the 81 bond holders. So let us cancel it. Because that is 81 bonds. Because the 81 bonds are additional tier 1 bonds. It is also called as the perpetual bonds. Perpetual. What is meant by perpetual bonds? This bond will be having no maturity. See, bond is same as FD in the banking sector. If you are having FD, fixed deposit in a bank, it will be having tenor, right? 2 years or 3 years, this much interest will be there. Same as that, if you are investing in bond in the share market, that will also have interest rate. Coupon rate it will have it. Then it will also have tenor, 1 or 2 years tenor it will have it. But this 81 bonds will be having no tenor. It is a perpetual bonds which no maturity date. That is, there is no call option. That is, you have got, you have invested in the 81 bonds of the Yes Bank. And what you are planning is that after 1 year, okay, right, let us get my money back from the Yes Bank. But yet, Yes Bank will not give you that money invested in their 81 bonds. That is 81 bonds. So if the Yes Bank decides that after 5 years or 10 years, okay, right, let us repay the bond. Let us repay the amount which you have got from the bond holders. If they decide, they can repay it. But we could not sell the same bond to the Yes Bank which issued that bond. That is the call option. It don't have any call option, but it has put option. What is put option? If Yes Bank decides, okay, right, let us repay the bond holders, let us get the bond back from the bond holders. If they decide, they can avail it. But or else, we could not sell the same bond to the Yes Bank. The bond which was issued by the bank, we could not sell them back to them. Because this bond doesn't have any maturity date. But the risk is that this bond have more risk. But one peculiarity is that this bond will be having higher interest rate. There must be some benefit, right? Higher rate of interest. There must be some benefit for the investors to invest in this 81 bonds. Benefit is that this bond will have higher interest rate. Risk is also there, but it will have higher interest rate, right? After 5 years or 6 years, once the Yes Bank put option, because put option is there for this bond. Once Yes Bank decides that, okay, right, let us get the bonds back from the investors, let us repay it, the investors will get a huge amount in return, because it will have higher rate of interest. That's what's so peculiar in Yes Bank. So what Yes Bank does is that in 2020, before 2020, Yes Bank had issued many 81 bonds and collected more funds from the investors. So once it had defaulted, when RBI take over the bank, what RBI came to know is that this bank has collected huge amount through the 81 bonds. What we can do? Let us write it off. We can repay it. So that's what the case went to the Bombay High Court. What Bombay High Court told is that, no, RBI, you should not write it off. You should not write off the 81 bonds of the Yes Bank. That's what told by the Bombay High Court. You should repay the amount what you have got from the 81 bond holders. That's what they have told it. Because in 2020, once the Yes Bank got defaulted, RBI stepped in, changed the management board. They have appointed Prashant Kumar, who is the former deputy managing director and chief financial officer of the State Bank of India. They have appointed, RBI had appointed Prashant Kumar as the administrator to recover the loans from the Yes Bank. But then only Prashant Kumar came to know that this bank has collected huge amount from the investors through the 81 bonds, through the issue of 81 bonds. So what RBI, then administrator, what he decides is that, okay, right, let us write it off. But now the case went to the Bombay High Court. Bombay High Court told us that you could not write off this, you should not write off this 81 bonds, you should repay the amount back to the investors. That's what they have told it, right? Some more information is there in this news article. In 2020, once the RBI takes over the Yes Bank loans, take over the management, what they came to know is that, okay, right, this bank has got huge amount through the issue of the 81 bonds. They came to know it. Then what RBI decided is that, let us restructure the loan. What RBI told is that, let us write off the 81 bonds. For 81 bond holders, we should not repay it. Let us write it off. Then some people would have invested in the shares of the Yes Bank, right? So for that people, for the shareholders, what we can do is that we can give 75% of the share, but after 3 years. But after 3 years, we could pay 75% of their shares, but now we could not pay it. That's what they have decided in 2020. But in the year 2022, SEBI imposed a penalty of rupees 2 crore on Rana Kapoor, who is the former CEO of Yes Bank. So before 2020, Rana Kapoor is the CEO of the Yes Bank. So during his tenure, during his period only, Yes Bank has got into this trouble, got into this default. Because Yes Bank had issued 81 bonds. 81 bonds have higher interest rate. It will be having higher risk, but it will be having higher interest rate. Those people who are investing in this 81 bonds, they will have higher interest rate of 9%. So that's why only people invested more in this 81 bonds. But they have they have cheated the investors also. That is what SEBI told is that 81 bonds, you should not sell that bonds to the retail investors, but rather bank does that. Yes Bank does that. That SEBI came to know it. So that's why only in the year 2022, last year, September month, 2 crore is levied as penalty to the Rana Kapoor, who is the former CEO of the Yes Bank. Then what in the 2022 year, September, they have imposed, SEBI had imposed a penalty of 2 crore from the former CEO of the Yes Bank. In the 2020, once the bank gets defaulted, what RBI decides is that let us write off this 81 bonds, and to the shareholders, 75% shares we can give it, but after 3 years, we can repay their money. That's what decided by the RBI. But 81 bonds, this case went to the Bombay High Court. And Bombay High Court had found that, then SEBI also found that in the year 2020, SEBI found that this bank, Yes Bank, had cheated the retail investors. They had cheated the retail investors. That is the person who had invested in the FDs of the Yes Bank. Those who had investment in the FDs of the Yes Bank had cheated the people and had brainwashed the people and told them that better invest the money what you have invested in the FD to the 81 bonds. Because they have told that if you are investing in 81 bonds, it will be a super fixed deposit product. They haven't told about the risk involved in that 81 bonds. Rather, what they have told to the FD holders, what they have told is that it is a super fixed deposit product. You invest in this, you will be getting higher returns. It will be having higher safety features also. So this is how Yes Bank had cheated the people. Fixed deposit holders, they have cheated it. But what SEBI told is that you should not sell this 81 bonds to the retail investors. Rather, What is Yes Bank does is that they have sold that to the retail investors. So that's why only SEBI in the year 2022 September they have imposed a penalty on the Rana Kapoor, former CEO of the Yes Bank. They have imposed. Now the case went to the Bombay High Court. What Bombay High Court told is that okay, right, you should not write off this 81 bonds. That's what Bombay High Court told us that. Then what investors are expecting is that okay, right, what the 81 bond holders, what they are telling is that better repay the money to us or else convert our bond to the shares of that company. So 80% of the amounts what we have invested in the bonds, accept it in the equity, accept it in the equity of the Yes Bank. That is, convert the bond amount, that is, convert the amount which we have invested in the bond to the shares of that bank. So that's what investors are expecting, 81 bond holders are expecting. Actually, in the year 2020, once the RBI came to know that, RBI imposed a moratorium. They have told that, okay, right, let us postpone it. Let us pay back after 2 months or 3 months, after 1 year, let us repay. Let us postpone it. After one year, we can repay it. That's what RBI initially decided. March 5, March 13, RBI initially decided that, okay, right, let us give moratorium for that. What is moratorium? It is postponing it. After 6 months or 1 year, let us repay it. But once the amount gets huge, once the RBI came to know that, okay, right, we have to pay huge amount to the 81 bond holders. So that's the reason RBI had write it off. So finally, RBI decides is that, okay, right, let us write off this 81 bonds. Now the case went to the Bombay High Court. Bombay High Court, what they have told is that, okay, right, better give the amount back to the 81 bond holders or else convert the amount which is invested in the bonds to the shares of the Yes Bank. That's what High Court, Bombay High Court have told. But Bombay High Court have given 6 weeks time to the Yes Bank also. Okay, right, you decided we are giving 6 weeks time. Before that, you decided you have to give an given decision. What decision you have taken, you have to tell to the Bombay High Court. But what Yes Bank have told is that you have given 6 weeks time, right? Okay, right, we are going for an appeal in the Supreme Court. If the Supreme Court also upholds the verdict of the Bombay High Court, then surely 81 bond holders will get their amount, will get their returns, will get their amount returned back, or else that amount which they had invested in the bonds will be converted to the shares of the Yes Bank. Let us wait and see what is going to happen. We have to wait and see. So that's how they have told in this news article, right? Then second news. RBI bans SBM India from allowing foreign remittances. Yes, State Bank of Mauritius, its Indian subsidiary bank, it is SBM Bank India. So to this bank holders, to this bank customers, now RBI had imposed a ban that your customers are not allowed to do any foreign remittances. That is, there are two types of remittances: inward remittances, outward remittances. Two types of remittances are there. What is remittances? Let us see. Let us see what is outward remittances. If a person in India, if he is sending his if he is sending his son or daughter to America or foreign countries for the education purpose, and he is sending money, he is sending dollars to his son or to his daughter, that will be called as outward remittances. That is, the money is going, that the Indian rupees must be converted to dollars, then he have to transfer that money to his son or daughter in foreign country. That is outward remittances. Same as that, if a foreigner, if an Indian who is living in foreign country, he is earning, then he is sending some amount of money to his family members in India, that is called as inward remittances. This happens, remittances happens every year, every month it happens. So same as that, in SBM Bank India also remittances happen. The customers in the SBM Bank, they also do the remittances, outward remittances, inward remittances, it happens. But now RBI imposed a sudden ban to the customers of the SBM India to not allow the foreign remittances, because what they have told is that under the liberalized remittance scheme. So under the liberalized remittance scheme, which was introduced by RBI government in 2004. This was a scheme introduced by the government in 2004 that allows all Indian individuals, that is outward remittances from India, Indian individuals, they can remit up to $250,000 per financial year. Per financial year, they can remit up to $250,000 to foreign countries. If their son or daughter is studying in America or in foreign countries, or if somebody is working, or if their relatives are in foreign countries, if they want to pay, give any gift to their family members or their friends in the foreign country. So for that purpose, they will be sending the remittances, right? What under the liberalized remittance scheme, what the government told is that, okay, right, up to $250,000 per financial year, you can freely remit. You have to pay only the tax related source. TDS only you have to pay it. Rest amount you can send to the send to your family members in the foreign countries. But what happens is that why suddenly RBI imposed a ban on the SBM India from not allowing the foreign remittances? Because what RBI tells is that we have imposed a ban due to some supervisory concerns, supervisory issues. For that purpose only we have imposed the ban. That's what RBI is telling. But actually what happens is that more and more people from India, they are investing their money, that is, they are sending their money through the liberalized remittance scheme to the foreign countries, particularly in Mauritius, because Mauritius is a tax haven country. There are many tax haven countries, because in that country, example, Mauritius, it is a tax haven country. In that country, if a person is investing in some asset, he don't have to pay the tax to the government. All of the tax will be very low. So that is how the tax haven countries work. If they are investing in that country, they have to pay very low amount or no tax must be paid to that government. Suppose if that person is investing in India, he has to pay tax to the government. So that is why through the liberalized remittance scheme, more and more Indians are sending money to the foreign countries, to their family members, and they are investing in that tax haven countries. So for that purpose only, RBI imposed a ban on the SBM India customers from allowing foreign remittances. Right? Actually, in the 2004 scheme, per financial year, $250,000 can be remitted from India. Right? Then again, initial limit, then you can enhance the limit also. Plus $25,000, plus $25,000, you can increase the limit also. This is what allowed. But actually, data they have given in this news article, the data is that in the month of November 2022, the month, single month, $2 billion is outward remitted. $2 billion is outwardly remitted from India, and half of it, that is around $1 billion, is remitted for the international travel purpose alone. Rest it is transferred for close relatives, maintenance of the close relatives, gifts purpose, overseas education, they have used it. But around $1 billion is remitted to foreign countries for the travel purpose alone. That's how RBI found it. That's what the data given in this news article. So for this fiscal year, financial year 2022-23, how much amount is remitted to the foreign countries? They have given this data also. Totally $17.28 billion is remitted from India to the foreign countries. That's how they have given in this. That's how it happens. So this is what the information they have given in this news article also, you know it. Right? Then third news. Japan's Credit Saisen company invests rupees 540 crore in its wholly owned Indian subsidiary. Yes. Japan's leading financial services company, that is Credit Saisen company, it had invested rupees 540 crores in its subsidiary company in India. That company, Japan's company, is having their subsidiary company, Indian branches in India, Credit Saisen India company. In that company, they have invested around rupees 540 crores. So totally they have invested around 1,600 crores. So in the 4 years, they have invested around 5,000 crore rupees. So in this news article, the important information is this year alone, they have invested 540 crore rupees in their subsidiary company called Credit Saisen India company. Then fourth news. Digital economy push offers hope for multiple players, MasterCard. Yes. MasterCard company's vice chairman and president, Michael Froman, he is the person, Michael Froman, he came to India to attend the B20 inception meeting, because we know that, right? This year end, we are going to conduct the G20 meeting, and it is to be presided by India. India is going to head this year's G20 meeting. So prior to that, before that, many meetings are planned to be organized in various states in India. Many meetings. So one among the meeting is B20 inception meeting. It is also held in India. In that meeting, Michael Froman had came to attend this meeting. Previously, he is the US G20 Sherpa. Previously, he held the position of G20 Sherpa of the US. What is meant by Sherpa? Actually, in G20 meeting, 20 G20 nations will be participating, right? Their representatives or their country's head, prime minister or president, will be participating in that G20 meeting. But prior to the meeting, every country, they will be announcing a person as a Sherpa to take over all the activities involved in that year's G20 meeting. He is responsible. So he will be appointed by the government. Same as that US also appointed G20 Sherpa as Michael Froman in the previous years. So now he came to attend this year's B20 inception meeting, which is held in India. In that meeting, what he told is that India's push towards expanding the digital economy, that is, Indian government is giving more importance to the digital economy, digital transaction in India, so that more and more companies are involving in this digital payment ecosystem. It is helping more and more companies to expand and growth in the digital sector. That's what he had told, right? Then fifth news. National Company Law Tribunal extends the status quo in the Reliance Capital case until further order. This case, this news we are seeing every week, banking owners, we are seeing this news, right? So same as that, this week also we have seen it. Actually, January 23, Committee of Creditors had planned to conduct second challenge auction, because first challenge auction was conducted on December 21, 2022. In that challenge auction, who had won the bidding, who had quoted the highest amount in the bidding is Torrent Group. But after one day, Hinduja Group told that I am giving more amount than Torrent Group, give the Reliance Capital loans to me. So that's created a difficult tug of situation between Torrent Group and Hinduja Group. Again, Torrent Group is filing a petition in the NCLT, same as that Hinduja Group is filing a petition in the NCLT. So finally, the case went to the NCLT. What NCLT told is that, okay, right, actually the Committee of Creditors and Administrators decided to conduct the second challenge auction because the amount what you have quoted in the first challenge auction, it is very low compared to the amount what they have expected. The amount actually they have expected a liquidation value, what the Committee of Creditors and the Administrator expected is around 13,000 crore rupees. They expect that they will be getting from this bidding. But both the companies, Torrent Group and Hinduja Group, they have quoted below 9,000 crore rupees only. So that's why they are planning to conduct the second challenge auction. That's what told by the Committee of Creditors and Administrator to the NCLT. NCLT must give a judgment to this, must give a decision. Actually, January 23, it must give a decision. But what NCLT told is that, okay, right, next week I am postponing this. Next week I will be giving a decision whether Committee of Creditors can conduct second challenge auction or not. Next week, Monday, I will be deciding it. So NCLT extends the status quo because they are maintaining this January 23 also they are maintaining, because January 19 itself they have to give a decision. But again, that postpones to January 23. Again, it is postponed to next week. So next week only we will be seeing whether second challenge auction is going to be held or not. Next week we can see it, right? Because January 30, beginning from January 30, next week they are planning to conduct the second challenge auction. Whether it is to be conducted or not, NCLT has to decide it. NCLT must give the judgment. It has to give it, but it told that we are maintaining status quo. This status quo, that is, we are not giving any judgment. I am not telling anything to do. So this case will be referred next week. I will be referring it, whether it is to be auction is to be held or not, I will be telling next week. That's what told by the NCLT. Okay. Then 60 news. Insurers want a NPS tax exemption for their pension schemes too. Yes, insurance companies. What they are expecting is that, because this year, February 1, 2023, our finance minister is going to announce budget for the financial year 2023-24. Next year's budget, our finance minister is going to announce on February 1, 2023. Prior to that, insurance companies is also expecting from the government is that give tax exemption similar to the national pension scheme. So, because insurance companies are also issuing a pension product. So, similar to the national pension scheme product, insurance companies are also issuing the annuity products. What they are expecting is that tax exemption must be given to our policy holders for the annuity product. Same as the national pension scheme, our policy holders must also avail tax exemption if they invest in the pension scheme of our insurance company. So that's what insurance companies are asking to the government. Because see, in the national pension scheme, up to 1.5 lakh rupees per year you can invest it. You can invest up to 1.5 lakh rupees per year. Suppose your salary is 5 lakh rupees per year and 2.5 lakh rupees is the limit. It is the tax-free limit. Above 2.5 lakhs, whatever the income you are earning, you have to pay tax to the government. So if you are earning 5 lakh rupees, 2.5 lakh rupees, up to 2.5 lakh rupees, it is tax free. So next 2.5 lakh, remaining 2.5 lakh rupees, you have to pay tax. For the remaining 2.5 lakh rupees, you have to pay 5% tax. The tax slab gets increased. But if he is earning up to 5 lakh rupees, his monthly, if his yearly income is 5 lakh rupees, for the rest 2.5 lakh rupees, he had to pay 5% tax to the government. Suppose if he is investing 1.5 lakh rupees per year in the national pension scheme, he can avail tax exemption. What is tax exemption? 2.5 lakh rupees, in the 2.5 lakh rupees, he had to pay 5% tax. Suppose if he is investing in the national pension scheme, per year he is investing 1.5 lakh rupees, he can avail exemption. That is, he can subtract it, then he will be paying income tax for the remaining 1 lakh rupees only. 5% of 1 lakh only he will be paying the taxes, because 1.5 lakh is the tax exemption if a customer, if a tax holder is paying, if he is investing in the national pension scheme, he can avail tax exemption limit up to 1.5 lakhs. Same as that insurance companies are asking. You are giving tax exemption limit for the national pension scheme investors. Right? Same as that, give tax exemption limit to our policy holders if they are investing in our annuity products, similar to the pension products. So, similar to the national pension scheme products, insurance companies are having the pension products. So, if a policy holder is investing in that pension products, you must give tax exemption similar to the national pension scheme product. That's what insisted by the insurance companies to the government. But we have to see whether in the budget, whether they are accepting, government is accepting or not, we have to see it. We have to wait and watch. What insurance companies are telling is that if you are giving tax exemption for the policy holders, if they are investing in our annuity products, in our pension products, that will help in deepening the insurance penetration. That will help to deepen that more and more people will be getting the insurance products. So that will help to deepen our insurance penetration to each and every people in the country. Because that's what told by the IRDA also. So, in the year 2047, each and everyone in India will have the insurance products. That is, each and everyone in the country will be covering under the insurance scheme. So, that's what, if we want to achieve that target, our government must provide tax exemption limit for the annuity products similar to the national pension scheme products. That's what insisted by the insurance companies to the government. Then, 7th news. Tier 2 cities beat metros in sale of term insurance products report. Yes, actually, there is a report, there is a survey conducted by India Protection Quotient. This company has conducted a survey. It is commissioned by Max Life Insurance. They have conducted this India Protection Quotient survey. So in that survey, they have released a report. In that report, what they have told is that compared to the metro cities, the people living in the tier 2 cities like Ludhiana, Jaipur, Patna and Pune, they are buying term insurance or pure insurance products more than the people in metro cities. That's what they have told it, because in the tier 2 cities, the people living in the tier 2 cities are now getting to know about the importance of the insurance products, because they have learned a lesson from the COVID-19 pandemic. Because in the COVID-19 pandemic, those people who have availed the insurance, they are claiming their health treatment in the insurance. So that's taught a lesson to all the people in the country. So that's the reason why tier 2 cities, people living in the tier 2 cities also buying more insurance products, but it is more when compared to the people living in the metro cities. That's what they have told in this report. Right. Then 8th news. Center to tap brakes on capex growth, key subsidies this budget, says new poll. Yes, there was also a survey, polling conducted by the Reuters poll of economists. So in that survey, what they have told is that in the upcoming budget, Indian government is planning to spend more on the capital investment purposes, and they are going to reduce their food and fertilizer subsidies. That is capital investment growth expenditure. For that purpose, government is going to spend more compared to the current financial year. Then food and fertilizer subsidy, they are going to reduce it. Compared to the current financial year, they are going to reduce the food and fertilizer subsidy for the next financial year, because continuously government is spending more for the capital purposes. So what is under capital expenditure? It is that is the amount is spent by the government to build the road infrastructure, to build the railway infrastructure, to build the airport, to build the bridges, to build all the buildings. So all infrastructure projects, government is spending more. So This financial year also government allocated more amount for the capex purpose. So next financial year also government to spend more for the capital expenditure compared to current financial year. But food and fertilizer subsidy, actually food and fertilizer subsidy, it got increased in the pandemic time. Pandemic time, food and fertilizer subsidy, for that purpose government is spending more, because pandemic time all economic activities are shut down and government have to spend more for the vaccines and for the health treatment for the people. So for that purpose government has spent more for the health expenditure also. Government has spent more for the food and fertilizer subsidy also, because in the ration shop you will be getting Modi rice, you will be getting, right? So that is what the subsidy given by the central government at free of cost they are giving it, but they have to spend it. They have to spend from their pocket. So what this Reuters poll of economists, this survey told is that next financial year capex purpose government is going to spend more, but food and fertilizer subsidy they are going to cut it down. That's what they have told it. Right. But one more information they have told in this news article is that government is spending more in the capital infrastructure purpose, but private companies are not spending that much as the government. That they have told in that. One more information is that data is that they have given in this report for the capex purpose current financial year government is spending, for the current financial year capital purpose they are spending 7.50 trillion rupees. They are going, actually they have given in the budget estimate of the financial year 2022-23. For the current financial year budget that will be announced, that would have announced by the finance minister in the month of February 1, 2022. She announced, right? For the financial year 2022-23, the budget she announced on February 1, 2022. In that budget, what they have told is that they have estimated to spend around 7.50 trillion rupees. That is 7.5 lakh crore rupees they are planning to spend on the capital expenditure for the current financial year. That they have told in the budget estimate of the financial year 2022-23, which was announced by the finance minister on February 1, 2022, previous year. Right? They have announced it. But actually it is the correct data. Budget estimate for the financial year 2022-23 in that capital expenditure, capex purpose, government have quoted around 7.5 trillion rupees, 7.5 lakh crore rupees government have quoted it. This data, it is not going to get changed. But what this survey told is that compared to this 7.5 lakh crore rupees, next financial year government is expected to spend more. That is around, they are spending more 17% extra they are planning to spend it. That is around 8.85 trillion Indian rupees they are planning to spend it. Next financial year capex purpose they are planning to spend it. That's what they have told. But for the current financial year, food and fertilizer subsidy government is spending, that is they have given in the budget estimate of the financial year 2022-23, what they have told is that 5.0 trillion rupees, that is 5 lakh crore rupees government have given in the budget estimate to spend for the food and fertilizer subsidy. That will get reduced. Upcoming financial year, that will be reduced to 3.7 trillion rupees. That is 26% it will be reduced. But capex purpose 17% it will be increased. You don't have to know this data, don't have to remember this data. But this data in the budget estimate for capex purpose for the current financial year, what was the budget estimate told by the government? You have to know it. 7.5 trillion rupees. For the food and fertilizer subsidy, what was told by the government in the budget estimate financial year 2022-23, that is 5 trillion rupees. This data is also not going to get changed. So this data also you have to know it. But remaining it will change. We will be knowing in the budget only what finance minister is quoting. We will be knowing in that. For that we have to wait for the next week. We have to wait it. But this data it is not going to get changed. So this data, remember it. 7.5 trillion rupees for the capex purpose, then for 5 trillion rupees for the food and fertilizer subsidy purpose. This is what quoted by the Indian government in the budget estimate of financial year 2022-23. The ninth question, ninth news. Center likely to borrow record rupees 16 lakh crore in the financial year 2023-24. Yes. For the upcoming financial year, same. It is also a survey. It is not the exact data. Next week only we will be knowing the exact data. What our finance minister is telling in the budget only, we will be knowing the exact data. But in the Reuters poll of economic survey, what they have told is that next financial year, government is planning to borrow from the market rupees 16 lakh crore rupees they are planning to borrow from the market. So that's what told by the told in this survey report. So that 16 lakh crore rupees, it is to be spent for the infrastructure spending. That is for the capital purpose. They are planning to spend more. Same as that, for the capital expenditure purpose, government is planning to raise fund more. That is, government is planning to borrow more. Around 16 lakh crore rupees, government is planning to borrow to spend for the capital infrastructure purpose. right? Actually, for the past 4 years, government have borrowed double. So that is, the federal government's gross indebtedness has more than doubled. That is, year on year government will be borrowing, because compared to expenditure, revenue is low for the government. Either tax revenue or other source of revenue, government, compared to the expenditure, what they are doing for the financial year, their revenues are very less. So for that purpose, to spend for the expenditure, what government will do is that they will borrow from the market. Right, same as that this financial year also they have borrowed from the market. Next financial year also they are planning to borrow from the market to the amount of rupees 16 lakh crore rupees. They have planned to borrow. It is given as per this survey. Actual amount we have to wait and see. What finance minister is telling in the budget, we have to wait and see. But what they have told is that for the past 4 years, so compared to the year 2018, this year for the past 4 years, the amount the government is spending, that is the amount the government is borrowing to spend for the capital purpose, it is getting doubled. That's what they have told in this report. In the year, you could have seen in the year 2020, financial year 2020, 21, 21, 22, that is the pandemic year. For that purpose, economic activities are shut down throughout the country. Economic activities are shut down. That means revenue for the government, it gets stopped. But government have to spend more for the health expenditure as well as for the food and fertilizer subsidy. Also, government is spending more. Government is spending more money from the pocket, but no revenue is there for the government. So what government will do? They will borrow from the market. Same happened. The COVID-19 pandemic year also, 2020, 21, 21, 22, government have borrowed more and spent for this all expenditure purposes. But next financial year also, government is planning to spend more. But pandemic year has got over. Pandemic year, it is finished economy. In India, it is finished. It is over. But in China, next wave of the pandemic, COVID is going on. But India, it is over. Economy is recovered. Slow by slow, we are moving on. Our economy is progressing compared to other countries of the world. But this year also, government is planning to rise more from the borrowings. Yes, government will borrow around 16 lakh crore rupees. They are planning to borrow. Because what they have told is that we are planning to borrow more because we are planning to spend more on the capex infrastructure. Capital expenditure purpose, we are planning to spend more. Food and fertilizer subsidy, we are reducing it because the economy have recovered. Pandemics have got over. So that's what they have told in this survey. Center is likely to borrow rupees 16 lakh crore for the upcoming financial year 2023-24. But the actual data, we must wait and see. Next week only, budget will be announced by the finance minister. So we will be getting to know the exact data in that budget only. So that's all. January 23, Monday news we have finished. Now we are going to see January 24, Tuesday news. Okay, right. 10th news. Public sector banks will continue to lag private peers in deposits, analysts. An analyst told that public sector banks will continue to lag behind the private sector in terms of deposits. See, actually, public sector banks is performing very well. It has lowered their credit costs, increase in risk appetite. That is, NPS are getting reduced in the public sector banks. Its credit cost is getting lower. But instead, what happens is that compared to private sector banks, public sector banks, deposits are getting reduced. See, actually, if a banking sector must perform well, then the banks must have more deposits in order to give more loans. But what happens is that now public sector banks are giving more loans, but deposits are getting reduced in the public sector banks. What public sector banks are doing in order to fund the loan is that they are borrowing from the market through the bonds. That with that amount they are lending to the customers. So that's what happened, but it is not good for the banking sector. So compared to private sector banks, public sector banks are performing well. But in terms of deposit mobilization, private sector banks are performing well compared to the public sector banks. That's what they have told in this news article. Then, if you compare the public sector banks with the private sector banks, private sector banks are more in the technology and manpower. They are ahead of the public sector banks. Private sector banks are ahead of the public sector banks in terms of technology and manpower. That's the reason why more and more high-yielding consumer loan segments are moving to the private sector banks when compared to the public sector banks. That's what they are telling in this news article. Public sector banks are performing well. They have low credit costs. They have increased their risk appetite. That is, NPS are getting reduced, but still public sector banks are lagging in the deposit mobilization in comparison with the private sector banks. That's what they are telling in this news article. Then 11th news. Banks transferred JP Infratech's 9,234 crore to NIRCL. Yes, we know that, right? Government bad bag. It is National Asset Reconstruction Company Limited. Yes. Now, after 1 year of implementation after 1 years of after 1 years of service in the market. Now NARCL had made their first acquisition. Yes, JP Infratech loan. Actually, JP Infratech company had bought a loan from various banks. In that, lead bank is the bank which has given higher amount of loan to the JP Infratech company is IDBI Bank. Out of 9,234 crore rupees, IDBI Bank alone given 3,750 crore rupees to the JP Infratech company. But as usual, JP Infratech company defaulted. It hadn't paid any loan amount back to those banks. So finally, what banks have decided is that, okay, right, let us sell these bad loans to the government-backed bad bank, that is NARCL. So now NARCL has made their first acquisition of the JP Infratech loan. It is the first acquisition of the NARCL. It was told by IDBI Bank CEO. IDBI Bank CEO Rakesh Sharma sir. He is the Rakesh Sharma sir. He told that we are the lead bank who had given more loan to the JP Infratech company. Now we have decided to sell all the loans to the NARCL. So with this, our bank's NPA, gross NPA, got reduced to 2.2%. So same as that, in every banks, those who have lended to JP Infratech company, their NPAs got reduced. Same as that, IDBI Bank also, in IDBI Bank also, their gross NPA gets reduced to 2.2%. Right? That's what they have told in this news article. Then 12th news. Banks seek immunity for board members, suggest National Bank for Financing Infrastructure and Development like shield against arrest. Yes. Actually, what banks are asking government is that better give some protection against the arbitrary attacks, because if a bank is giving the loan to a customer and the customer is defaulting, or there is some loan scam which happens in the bank, then what actually enforcement directorate will do is that, they will arrest the board members, board of directors, they will be arresting, because they were responsible for giving loans to those customers and they were not repaying back. So the reason for the default lies mainly with the board members. So that is the reason banks are asking the government that give some protection against the arbitrary arrest, because if the loan scams case happens in a bank, straight away they are focusing on the board members, they are arresting the board members. Enforcement directorate is taking action against the board members, give some protection against that. Same as the National Bank for Financing Infrastructure and Development, because in this bank it is a National Bank for Financing Infrastructure and Development, same as NABARD, right? In this bank, if they give a loan to a customer, if the customer gets defaulted of the loan, or there is a loan scam case, which if it happens in this bank, actually enforcement directorate, they will not, or CBI, they will not arrest this bank's, a National Bank for Financing Infrastructure and Development bank's board members. So same as that, give some protection to us also. That was asked by the banks to the government, because if you are arresting the board members, that will hinder the decision making process of the bank, as well as the growth and development of the bank will also get reduced. So that gives some protection against this arrest. That's what asked by the banks to the government. Because previously in the year 2021, in a loan scams case, former State Bank of India, former SBI chairman Pradeep Chaudhary sir was arrested. So that's why banks are asking to the government, give some protection against this arrest, because previously in a loan scams case, you have arrested former State Bank of India chairman Pradeep Chaudhary sir. So that only more and more board members are getting feared. For that purpose only, they are asking the government give some protection, same as National Bank for Financing Infrastructure and Development, because in National Bank for Financing Infrastructure and Development, the board members are getting some immunity, because enforcement director and CBI will not arrest the board members. If the loan default case is found in that bank also, they will not arrest them. Same as that, banks are demanding, asking the government give some protection like National Bank for Financing Infrastructure and Development. So that's what they have given in this news article. Then 13th news. RBI slaps rupees 26 lakh penalty on Nutan Nagagarik Sahakarik Bank. Yes. In Ahmedabad, in Gujarat, there is a urban cooperative bank called Nutan Nagagarik Sahakarik Bank. So in this bank, RBI had imposed penalty of rupees 26 lakh penalty they have imposed, because this bank doesn't follow the RBI regulations, Banking Regulations Act 1949. They haven't followed. So they haven't followed some RBI regulations. For that purpose only, RBI imposed 26 lakh penalty on this Nutan Nagakari Sahakari Bank in Ahmedabad in Gujarat. Then 14th news. Standard Chartered announces 2 senior level appointments for India and South Asia. Yes, Standard Chartered Bank has announced that they are going to appoint Sarbajit Anand as the Chief Technology and Operation Officer. He is the Sarbajit Anand. Then SV Shivashankar as the Head of the Human Resources for India and South Asia. He is SV Shivashankar. So they are telling that we are going to appoint Sarbajit Anand as the Chief Technology and Operation Officer, SV Shivashankar as the Head of the HR for India and South Asia. This is going to get effect from, going to be implemented from January 2023. That's what Standard Chartered Bank has announced. Then 15th news. Will budget take a pause on bank privatization even as lenders hit a purple patch? Yes. Actually, in the financial year 2021-22 budget, our finance minister had told that we are going to privatize 2 government banks. So most probably they haven't told which government bank they are going to privatize, but Niti Aayog had told that they are going to privatize Central Bank of India and Indian Overseas Bank. That's what they have told. Niti Aayog had told, but that wasn't revealed by the government. But in the year on year in the budget, what government will tell is that we are going to privatize this company, we are going to privatize this public sector bank, this private sector, this public sector companies. That is, they are going to disinvest the shares in the public sector enterprises or public sector banks. Same as that in the budget of 2021-22, government told that we are going to privatize 2 public sector banks, but which bank they haven't revealed, but still they haven't privatized any public sector banks. But now they are asking that because February 1, 2023, our finance minister is going to announce the budget for the upcoming financial year 2023-24. So they are asking that is, experts are asking that whether there is any privatization plan in the upcoming budget. That's what they are asking. But what government is telling is that no, we are not having any idea because public sector banks are performing very well after the pandemic. At the same time, 2023 is going to be a global recession year because there is a Russia-Ukraine war. In actually, US Federal Reserve have increased their repo rate. That is their central bank rate. US Federal Reserve, that is same as Reserve Bank of India. US Central Bank also raised their repo rate because there is also a inflation in their country. In India also we are having inflation. In China there is other wave of COVID-19 pandemic. So globally, the world is going to be in a recession state in the year 2023. That's what they are predicting. Whether it is going to happen or not, we don't know. But the prediction is that globally 2023 year is going to be a recession year. So based on that, fearing that, what government announced that we are not having any plan to privatize public sector banks in this financial year. That is the upcoming financial year. That's what they are expecting. That's what is expected from the government. Still, we have to wait and see what finance minister is telling in the budget. We have to wait and see. Then 16th news. Transition to expected credit loss based provisioning may hit banks only one time report. Yes, ICRA rating agency has released a report. In that report, what they are telling is that, what ICRA is telling is that better banks can move to the expected credit loss based provisioning, because that approach better banks can move on. If they move on, that is going to be a only one time move. Then bank is going to actually buffer more amount in the provisioning. So it is a better option for the banks. It was told by the ICRA rating agency have told that. Actually, you know, previous week also we have discussed this. What RBI previous week they have released a research paper. In that research paper, what RBI told is that better all scheduled commercial banks must move to the expected credit loss based provisioning approach, because the current approach we are following is incurred credit loss base, incurred loss provisioning approach. This is the current approach we are following. See, if a bank is giving a loan to a customer, if the customer is defaulting, he is not paying interest or principal, automatically after 3 months that asset is going to be in the NPA category. Right. So, in order to tackle this NPA, what banks will do is that they will allocate the separate fund. They will allocate NPA loan provisioning fund. What RBI is telling is that, what RBI is telling in their research paper is that, that was also insisted by the ICRA. Same as RBI, ICRA also insisting the same approach. What they are telling is that after giving a loan to the customer, if the customer is defaulting that loan amount, after that, if you are going to the NPA fund, that loan provisioning fund, you are adjusting it, better you adjust prior giving the loan to the customer. Before giving loan to the customer, you adjust the NPA loan provisioning fund. After that, you can give the loan to the customer. So that is what the expected credit loss based provisioning approach. So this was insisted by RBI previous week in its research paper. Same as that, ICRA also insisting it. This week they are also insisting it. What RBI said is correct. Better banks must switch on to expected credit loss based provisioning approach. It is good for the banks because it was told in the INDAS, that is India's version of International Reporting Financial Standards. We have it, INDAS. In that, RBI told that banks must follow this expected credit loss based approach. Now NBFCs are following. Banks are not following because that was not implemented. Previously in the year 2016, in February, RBI told that banks must follow this INDAS, in this implementation of India's reporting standard. RBI told that you must follow that. If it gets implemented, definitely all banks would have followed the expected credit loss approach. But that was not implemented. That was told that banks should follow from April 1, 2018. But banks haven't followed. It was not implemented. But now what RBI is telling is that, okay, right, based on this expected credit loss based provisioning approach or this model, we are going to give a final guidelines in the upcoming financial year 2023-24, and finally we are going to implement it from April 1, 2025. That is the financial year, from the financial year 2025-26. 25-26, we are planning to implement this expected credit loss based provisioning approach instead of incurred loss approach. That's what told by the RBI. Same ICRA also repeating that. Actually, you see what is the advantage in this expected credit loss approach is that normally if a bank is giving loan to your customers, they will be separating that loans in three stages. Loans will be classified under three stages: stage 1, stage 2, and stage 3. If a loan is in stage 2 and stage 3, then for that loan, more provisions, higher provisions must be maintained. So that's what the advantage is in this expected credit loss model. So that is why RBI is telling it that all scheduled commercial banks must follow this expected credit loss based provisioning approach. It is good. It is a one-time approach we are following. After that, we don't have to worry about the NPAs because we'll be maintaining more provisions in the NPAs. That's what told by the RBI. This is in contrast to the existing approach, because now what approach we are following? Incurred loss provisioning approach we are following. Once the loan gets a defaulter, we are going and adjusting the NPAs, but it is not going to be correct. So that's why RBI told that, okay, right, let us implement it from April 1, 2025. This expected credit loss approach, we can implement it. Based on that approach, related to that approach, we are releasing guidelines in the upcoming financial year 23-24. That's what told by the RBI. Then 17th news. Legal Pay acquires strategic stake in Gujarat-based NBFC Padmalaya Reserve. Yes. In Gujarat, there is a NBFC named Padmalaya Reserve. Actually, this NBFC will be giving loan towards the legal expenses to the legal companies. For the expenditure purposes, this company will be giving loans. Padmalaya Finserv will be giving the loans. As well as this Padmalaya Finserv company will be giving loans to those companies in the corporate insolvency resolution process also. Those companies who had defaulted the loan and that case went to the National Company Law Tribunal. That is the corporate insolvency resolution process. This Padmalaya Reserve will be giving loan to that companies also. Those companies in the corporate insolvency resolution process also, they are giving the loans. So in this company, in this Padmalaya Finserv company, now a startup company, that is a third party litigation. This company is also funding for the giving loans for the legal expenses purpose only. This startup company, Legal Pay, is going to acquire a minor stake, that is going to purchase a minor share in this Padmalaya Finserv company. That's what they have told in this article. Then 18th news. Nomura hires a top ICICI banker to head India equity capital market business. Yes, Nomura. It is a Japanese-based company. Japanese finance company. What they have told is that they are going to appoint Mahesh Natarajan as its head of its equity capital market business, but this was not officially announced by Nomura company because sources told that there is a prediction that they are going to appoint Mahesh Natarajan as the head of the equity capital market, because at present Mahesh Natarajan, he is the head of the equity capital markets of the ICICI Securities. He is Mahesh Natarajan. Actually, he has many experience. He has around 17 years of experience in the ICICI Securities as the head of the equity capital market, as well as he had worked in the Morgan Stanley earlier. the American-based MNC company, financial company. Morgan Stanley also here previously worked. What Nomura Japanese-based financial company is planning is that they are planning to bring Magesh Natarajan from ICICI Securities and planning to appoint him as the head of the equity capital market business of the Nomura Holdings in India, right? But this was not officially announced by the Nomura, but predictions are there. They are going to appoint Magesh Natarajan as the head. That's what they have told in this news article. Then 19th news. Transactions worth rupees 12,000 crore by insurers under taxman lens. Yes. Actually, insurance companies, they have to pay commissions to the insurance agents. But what insurance companies will do is that they will be paying insurance agents commission through these shell companies. What is shell company? See, suppose a company in India, they are starting their branch in Mauritius. But that is the company A's branch is in Mauritius, but physically there won't be any company in Mauritius. Physically that company won't be present in the Mauritius. But in the paper document, that in the paper base, there is a company in Mauritius called A. So that is what the shell company is. Actually the company won't be there. Company won't be there in that country. But in the paper, in the document, there is a company. It will be there. It will be registered. But actually there won't be any company. In that way only, insurance companies will be paying the insurance commissions agents. So while paying the insurance agents commission, actually insurance companies are doing the tax evasion process. That is, without paying tax to the government, they are paying commissions for the insurance agents. So this was identified by the income tax department. So more than 12,000 crore rupees transaction between insurance companies and insurance agents, that was done in the tax evasion. So that was tax evaded. Without paying taxes, insurance companies had paid commissions to the insurance agents. That worth is about 12,000 crore rupees. It was identified by the income tax department. Previously also in the November month 2022, last year, what IRDA does is that they have actually GST authorities, income tax department had told to the IRDA that insurance companies are tax evading while paying the commission amount, that while paying the commissions to the insurance agents. So that's what told by the income tax department to the insurance regulator. Later in the November year, income tax department conducted raid in the insurance agent's office also. They have conducted a raid in the insurance agent's office also. What now they have found is that around 12,000 crore rupees fund, transaction fund, was tax evaded by the insurance companies. That was found by the income tax department. So transaction worth rupees 12,000 crore by the insurance companies was come under the taxman's, income tax department's eyes. That's what they have told. Then 20th news. Private equity firm Bain CVC Capital among those circling around Max Financial Services to buy out promoter Analjit Singh. Yes, Max Financial Services company. It's a famous company in India. This company's financial services company's promoter, owner is Analjit Singh. He is Analjit Singh, important promoter of this Max Financial Services Limited. Now he is going to sell his share in this company. So this share is expected to be bought by Bain Capital and CVC Capital, famous private equity companies called Bain Capital and CVC Capital. They are interested to buy the Analjit's share in the Max Financial Services Limited. Actually, in the Max Life Insurance, Max Financial Services is the parent company. That is, they are the major shareholder of this Max Life Insurance company. Then in that co-promoter, the co-promoter of Max Life Insurance company is Axis Bank. It holds around 12.99% share in the Max Life Insurance. But now see, Max Financial Services company is the major shareholder of this Max Life Insurance. But in the Max Financial Services company, the major shareholder Analjit Singh, he is going to sell his share. That was to be purchased by that Bain Capital and CVC Capital are planning to purchase this Analjit Singh share, major promoters share in the Max Financial Services Limited. One more information is that in Max Financial Services, Japanese-based insurance company called Mitsubishi Sumitomo Insurance Company owns 21.86% in the Max Financial Services. The Max Financial Services company major shareholding is owned by the Analjit Singh. Then rest of 21.86% it is owned by the Japanese-based insurance company. Actually, in the year 2012, this Japanese-based insurance company, Mitsubishi Sumitomo Insurance Company, had bought the entire 26% of the Max Financial Services Company share in the Max New York Life joint venture for rupees 2,731 crore rupees. During that year, it was considered to be the second largest deal in the insurance sector. So, that much big company, it is the Max Financial Services Company. Now, in that company, the major promoter share is going to be sold. That is to be expected to be purchased by Bain Capital and CVC Capital. That's what they have told in this news article. Then 21st news. States interest cost inches up as borrowing grows 8%. Yes. Same as central government, they will be purchasing, they will be borrowing from the market using government securities. Same as that, state government will also borrow from the market using SDL loans, state development loans. So, this week also state government had raised funds, had borrowed from the market around 25,700 crore rupees. They have borrowed, around 15 states have borrowed. 15 states have participated and they have borrowed around 25,700 crore rupees using SDL loans. They have borrowed from the market. But for many weeks, actually the state's borrowing cost, that is the interest rate for that SDL loans is very low. But now suddenly, the interest rate got increased by 5 basis points to 7.64%. That's what they have told. States interest cost inches up as borrowing grows 8%. Yes, states borrowing is expanded. States borrowing compared to the previous week, it is increased. This week it is increased. But the interest also got increased. So, borrowing cost. What is borrowing cost? The interest which they are paying to the investors, that also got increased. So, in this week, around 15 states have borrowed 25,700 crore rupees, but at the interest rate of 7.64%. It is the state's borrowing cost gets higher compared to the previous weeks, because for many weeks, the borrowing cost is very low. But now it increased to 5 basis points. 7.64% is the interest rate for this week's SDL loans. This was noted by the ICRA ratings. That's all. Okay, right. January 24, Tuesday news we have finished. Now we are going to see Jan 25, Wednesday news. 22nd news. Banks are relying on costly market borrowings for lending. Yes. Previously we have seen, right? Banks are purchasing more from the market. That is, through bonds they are purchasing more, and at the higher rate of interest they are lending to the customers, because credit growth, both to public sector banks and private sector banks, credit growth is higher. So, this financial year around 18% credit growth is there. But when compared to the deposit growth, it is half of the credit growth. Deposit, it is half of the credit growth. That is around 9%. 9% is only the deposit growth. So, what analysts are telling is that, experts are telling is that, banks are relying more on the market borrowings for lending than on the deposit growth. Actually, if your banking sector must perform well, if your banking sector wants to perform well, they must allocate more amount. That is, they must take steps to mobilize more deposits. With that deposits only, they have to lend money to the customers. But instead, what banks are doing is that they are not, actually they are taking some steps, but they are not taking various steps to mobilize the deposit. That is, they are not increasing the deposit rates to that amount that should attract the customers to deposit more in the banks. Right? The deposit rates are very, very low when compared to the lending rate. So, banks are also not increasing the deposit rate to that level, to that of the credit rate, lending rate. So, that is the reason why banks are borrowing from the market. That is, in the share market, through the bonds, they are borrowing, and with that money, they are lending to the customers. So, actually in this news article, they are giving two dimensions. What dimension is that? One, actually, if you are borrowing from the market and lending to the customers, you are in danger. That's what they are telling in one dimension. Actually, in an analysis, what they have told is that in the year 2022 alone, banks' market borrowing has doubled to 4.4 lakh crore rupees. Yes, banks have borrowed from the market and lending to the customers. Credit growth have increased because corporates, MSME sector, they are all borrowing from the banks. But banks are not having money. Instead, they are borrowing from the market and they are lending to the customers at the higher rate of interest. That's what happening in the banks. That analysis and experts are telling us that you are in danger, don't follow this. In one dimension, what they are telling is that, okay, right, suppose if bank increase the deposit rate and more people are depositing in the bank. Suppose more and more people are keeping fixed deposit in the bank. Actually, fixed deposit is a lock for 2 to 3 years, right? If you have fixed deposit for 2 years, then the banks could not alter the interest rate for 2 years. But what happens now? RBI, due to inflation, RBI increasing its repo rate. So banks don't know when will RBI increase the repo rate further, because current repo rate is 6.25%. So if the RBI increases the repo rate in future, banks could not suddenly increase the deposit rate, because in FD the interest rate is locked for 2 to 3 years. That is why the tenor rate is locked. So it is better for the banks to borrow from the market and lend it to the customers than to mobilize the deposits, that they are telling. And another dimension in this news article, they are giving both dimensions. Market borrowings are good, they are telling that. Market borrowings are bad, they are also telling that. Deposit mobilization is good, they are also telling that. Deposit mobilization is bad, they are also telling that. Both dimensions they are telling in this same article, but you know it, right? Then 23rd news. SBI services could be impacted after unions called for strike on January 30-31. Yes, there is a bank union named Union Forum of Bank Unions. They are planning to go on strike. They are planning to go for strike on January 30 and January 31. A 2-day strike they are planning it. For what they are planning it? See the demand. Actually, they are going for strike for the wage settlement. That is to increase the salary. For the salary increase is the one demand. Next demand is that 5-day working week in banks. See, actually, for a PO, bank is giving around 60 to 70,000 rupees. For a clerk, they are giving around 30 to 40,000 rupees. Actually, it is the highest salary in the market. Compared to other sectors, it is the best salary. But instead, still, bank unions are asking for more salary. That is what a first demand. Second demand is 5 weeks working day. Actually, bank is working for 5 days, 5 weeks on 5 days in a week only. Second Saturday and second Saturday and fourth Saturday, it is a holiday. Only first Saturday and third Saturday they are working. Now what bank union is demanding is that we want only 5 days working in a week. We don't want first Saturday and third Saturday as the working day. That also they are demanding it. Okay, they can demand. But what State Bank of India is telling is that, okay, right, bank union is going for a strike. We know that, but necessary arrangements are made that normal functioning of SBI will be done. It will be continued. Normal functioning of the SBI will be continued, but some operations would get affected. Some services would get affected. That's what told by the State Bank of India. Then 24th news. Promoter group reclassified as public, Reliance Capital. Yes, we know that Reliance Capital Company's resolution process in NCLT is in NCLT, right? Now Reliance Capital Company's bidding was also conducted. First challenge auction was also conducted, and in that Torrent Group, Hinduja Group, Cosme Pyramid Company had quoted their bidding. What now Reliance Company does is that they are going to the Bombay Stock Exchange and National Stock Exchange. They are filing an application that better reclassify our promoter group to public. That is, in the Reliance Capital Company, promoters who are the founders of that Reliance Capital Company, that category must be reclassified to public category, because this company is going to be sold. This company is going to be sold, right? So that's what insisted by the Reliance Capital Company to the Bombay Stock Exchange and National Stock Exchange, because it is in accordance to the Regulation 31A. Because Regulation 31A of SEBI insisted that if a promoter is selling his share, then automatically that share must be listed as listed in the public category. That it must be reclassified as the public category. Promoter group category must be reclassified as public category. This is what insisted by the Reliance Capital Company to the Bombay Stock Exchange and National Stock Exchange too. For that, they have filed an application also. We know that, right? Reserve Bank of India on November 29, 2021, they have insisted the corporate insolvency resolution process for the Reliance Capital Company in the National Company Law Tribunal, and they have appointed, RBI had appointed an administrator named Nageshwar Rao White to recover the loans from the Reliance Capital Limited. So, to take care of all the bidding process. So, finally, bidding is going to be get over. Second challenge auction they are planning to conduct on January 30, but anyway, within 1 or 2 months, it is going to be finished. So, for that purpose only, Reliance Capital Company had filed an application to Bombay Stock Exchange and National Stock Exchange to reclassify them as public. From the promoter group, better reclassify as public, because the company is going to be sold. So that's what they are given in this news article. Then 25th news. digital currency to further bolster digital economy, says RBI. Yes. RBI's Executive Director, Ajay Kumar Chaudhary, sir. He is Ajay Kumar Chaudhary, sir. Actually, he is addressing a seminar which was conducted by the RBI. Seminar name is Central Bank Digital Currency, the India Story. In this seminar, actually, RBI Executive Director Ajay Kumar Chaudhary is a participant. He is addressing that seminar. This seminar is conducted 2 days. 2 days. Actually, it is conducted ahead of the 2-day International Financial Architecture Working Group G20. It is ahead of this G20 meeting. Not the final G20 meeting, but it is ahead of the G20 2-day International Financial Architecture Working Group meeting that is scheduled to be conducted on January 30 and 31. Before that, this seminar was conducted, and in that seminar, what RBI Executive Director Ajay Kumar Chaudhary sir told is that digital currency, that is, India is moving to the RBI is introducing digital currency, so that will definitely improve the payment ecosystem. That makes the payment system efficient, and that will reduce usage of the physical cash as well. That will definitely reduce the usage of physical cash. At the same time, payment systems will get more efficient. That's what told by the RBI Executive Director Ajay Kumar Chaudhary sir. Because we are taking Indian economy, RBI is taking more efforts for digital inclusion and digital currency and digital economy. But see, actually RBI introduced central bank digital currency in the line of cryptocurrencies, because what RBI found is that more and more people are interested to invest in cryptocurrencies like Bitcoin, Ethereum. So for that purpose, why can't we introduce an digital currency? So for that purpose, RBI introduced central bank digital currency in wholesale and retail segment also they have introduced. But on the pilot basis, they have launched it. Not in the country wise. Whole country they haven't launched the central bank digital currency, but in some banks, in some places they have launched it. But now they are planning to launch it over the country wise. All over India they are planning to launch it. But this central bank digital currency, it is not at all equal to this cryptocurrency, because see, Bitcoin's exchange value is more. If you are having one Bitcoin, its exchange value in terms of Indian rupees is you will be getting 30,000 to 40,000 rupees if you are having Bitcoin in the hand. It is same as that gold. If you are having 1 gram of gold, you will be getting 5,000 rupees, right? Because gold rate is like that. Same as that, Bitcoin also exchange rate is more. But the central bank digital currency, which is introduced by the RBI, it is same as the physical currency. But the physical currency, it is in digital form. In Google Pay, Phone Pay, we are digitally transacting the money, not a digital currency. But instead, if central bank digital currency, if it is implemented all over India, if we are having 100 rupees physically, instead of that, we will be having 100 rupees digitally. That's all. It won't be having any change in the exchange rate. Same 100 rupees value, it will be having it. Whether it's physical currency or digital currency, same value it will be holding it. So that's what told by the Central Bank of India. That is RBI. That's what they have told it. So what Chaudhary sir, RBI Deputy Executive Director, RBI Executive Director Chaudhary sir told us that, said that central bank digital currency is just a digital form of the physical currency, and it will have all its characteristics. What and all the characteristics involved in the physical currency, it is same as that of the digital currency also. Same characteristics, it will be there in the digital form also. That's what told by the Amitabh Chaudhary sir. Amitabh Chaudhary, no, Ajay Kumar Chaudhary sir, RBI Executive Director. See, this is the central bank digital currency. Digitally, instead of 100 rupees physically, you will be having that 100 rupees digitally. That's all. Okay, right. January 25, Wednesday news we have finished. Now we are going to see January 26, Thursday news. Let us see. 26th news. Sri Group companies lenders agreed to set aside rupees 824 crore sale proceeds in escrow account. Yes, same as Reliance Capital companies, Sri Group companies resolution process is also going on in National Company Law Tribunal. What majority of lenders, that is, it is also that lending resolution process is also going to get finished. So majority of lenders, that committee of creditors, what they have decided is that out of the proceeds, what we are getting from the sale of the Sri Group of companies loans, out of that money, 824 crore rupees, we can take it out and keep it in a separate account called a escrow account. It is a third party account. It is a third party account which is not at all related to the Sri Group of companies and the lenders. It is a third party account. So out of the proceeds which they are getting from the Sri Group of companies resolution process, out of that 824 crore rupees will be kept in a separate escrow account, third party account. They will be keeping it. Rest only they will be sharing among the lenders. Because last week we have seen, right, actually that resolution process must be finished, that is the voting process, because in this most probably they will be selling that Sri group of companies loans to NARCL because they have quoted the highest value, highest net present value, they have quoted it. But in the last week, suddenly at the last time, NABARD had arrived and told that out of the proceeds which you are getting from the Sri group of companies resolution process, major amount must be given to me. That's what told by the NABARD at the last time. At the last time, NABARD entered and told that more amount must be given to me because I have more securities in this Sri group of companies, because I have lent more to the Sri group of companies, so that more proceeds must be allocated to me. That's what told by the NABARD. So finally what they are telling is that, okay, right, Sri group of companies lenders, what they are telling is that, okay, anyway, out of the amount what we are going to get from the Sri group of companies resolution, out of that 824 crore rupees must be kept out in a separate escrow account. That's what they have told it. One more information they have given in this article, that Adishri Commercial, it is a subsidiary company of Sri Equipment Finance Company. It's a subsidiary company of Sri Equipment Finance Company. Already Sri Equipment Company, Sri Finance Company, its resolution process is going in the National Company Law Tribunal. But this Adishri Commercial Company, that is the subsidiary company of the Sri Equipment Finance Company, they have filed an petition in the appellate tribunal that the resolution process must not be conducted in that subsidiary company. That is, you can conduct resolution process in the Sri Equipment Finance Company, but you should not conduct the resolution process in the Adishri Commercial Company. That's what insisted by this Adishri Commercial Company. They have filed a appellate petition. That is, they have filed a petition in the appellate tribunal. National Company Law appellate tribunal, they have filed a petition. But what the appellate tribunal told is that actually Adishri Commercial Company is the subsidiary company of Sri Equipment Finance Company, right? Sri Equipment Finance Company is already in the resolution process. Then same, the resolution process will be done to you also. We could not cancel it, so that appellate tribunal rejected the petition of this Adishri Commercial Company. So that also you know it. Then 27th news. Reliance Capital lenders withdraw plea against National Company Law Tribunal stay order. This news also previously we have seen, right? Actually, January 23, this week Monday, second challenge auction of the Reliance Capital Company's resolution process must be done. But Torrent Group have filed a petition in the National Company Law Tribunal. For that purpose only, what National Company Law Tribunal does is that they have maintained status quo and told that next week Monday we will be hearing this petition. So for that purpose, Committee of Creditors, which have given loan to the Reliance Capital Company, they have filed a petition in the appellate tribunal. They filed a petition in the appellate tribunal, and in the appellate tribunal, what they have told is that still 1 week time is there. Wait for 1 week. National Company Law Tribunal will give an order or judgment on next week Monday. Wait for that, was told by National Company Law Appellate Tribunal, so that National Company Law Tribunal, so that Reliance Capital Company's Committee of Creditors, they have withdrawn the petition from the National Company Law Appellate Tribunal. That's what they have given in this news article. We already know it. Next week Monday, that National Company Law Tribunal will be giving the order to conduct the second challenge auction. So because it is to be done by the administrator Nageshwar Rao, because he is responsible for the resolution of the Reliance Capital Company's loan. So for that purpose, Nageshwar Rao was appointed by the RBI in 2021. So we all know that this story, we know that previously we have seen, right? Because why National Company Law Tribunal has maintained a status quo? Because Torrent has filed an appeal. Torrent Group has filed a petition that on the December 21, it is the first challenge auction day. On that day, I had quoted the highest amount. Give the bidding to me. Why are you conducting the second challenge auction? Because after 1 day, Hinduja Group had come in between and told that give the loan to me. I will be giving more amount than the Torrent Group. So that created a tug of war situation. Finally, whole process it got shifted and second challenge auction is going to be conducted. But for that purpose, next week Monday, National Company Law Tribunal will be giving the judgment or the order, right? Then 28th news. Banks on branch additions spree to cash in on credit growth. Yes, both the public sector banks and private sector banks, they are planning to increase their branches. That is branch addition they are focusing on. Digital banking is also growing in India, but still physical plus online approach is here to stay. What bank feel is that physical branches must be improved. At the same time, digital banking must also be focused on. So for that purpose only, more branches are expanding. So in particular, when compared to public sector banks, private sector banks are leading. This trend is led by the private sector banks. Example, HDFC Bank. HDFC Bank alone, in the December quarter, that is the third quarter of the current financial year 2022-23, in the third quarter alone, they have opened around 684 branches. Still, they are planning to add more than 1,500 branches in the upcoming years. Right? Then 29th news. No significant risk to Indian banking system from Adani Group, CLSA. Yes, Global Broking and Research Company called CLSA. What they have told is that actually Adani company's share value had got down. You have seen in the news channel or in the YouTube, you would have seen, right? Adani company's share value had got down, so that more and more people are selling their shares in the Adani company, so that its share value had got down. The reason behind is that actually there is a small trading company, small New York based trading company which are invested in the Adani Group. What they have told is that actually Adani company has involved in the fraud and stock manipulation. Yes, in the stock they have done some fraud. Adani Group has done some fraud and they have manipulated some stocks. That's what told by the New York trading firm. It is a small company which has invested in the Adani Group. Suddenly what all shareholders, investors decided that they suddenly started to sell all their shares in the share market. So suddenly what will happen? If all shareholders suddenly sell all their shares, what happens? Share value gets down. Because there should be buyers to buy that, right? More sellers are there, now buyers should be there. But there is no buyers. Because fearing the default of the Adani Group, what investors would fear is that if Adani Groups get defaulted, what will happen to our share amount? So for that purpose, they are planning to sell it. But there must be someone to buy it. If there is no one to buy it, then suddenly, definitely government will get involved. LIC will come to recover it. That will happen. But that is in the last stage. But actually, in this news article, what they have told is that in the terms of debt, that is in the percentage of debt which was got by the Adani Group, major amount, actually nearly 40%, less than 40% is exposed by the Indian banking group. Actually, total debt which was got by the Adani Group, out of that, less than 40% debt they have taken from the banking industry. They are taken from the Indian banks. So that's what told by the CLSA. So banks are not in a critical situation. Banks are safe because less than 40% only, out of the less than 40%, see, if a bank has 100 rupees, out of 100 rupees, 40%, less than 40 only they are given to the Adani Group. Remaining they have given to more investors, they have more companies, they have given it. Less than 40% only they have given. So in particularly private banks, if you see, less than 10% only total debt which they have given to all the companies, out of that 10% only given to the Adani companies. That's what they have told. So Indian banks won't suffer that much. No significant downside risk to Indian banks from Adani Group debt. Definitely, Adani has borrowed from the banks. If Adani company share value get reduced, automatically what will happen? Indian banks will also get affected. But it is not in a critical situation. That's what told by the Indian banks. We are not in a critical situation. Definitely there is an impact, but we are not in a very critical situation because see, actually Adani Group's total debt is, see, the total debt of the Adani Group, how much amount they have borrowed, see, 2 trillion rupees as of now. So 3 years back, they have a total debt of around 1 trillion rupees. Now they have around 2 trillion rupees debt. That is 2 lakh crore rupees they have borrowed from the bank and from the market. So in that 2 lakh crore rupees, 40%, less than 40% only they have borrowed from the banks. Remaining they have borrowed from the market, share market, using bonds and shares only, they have borrowed it. But suddenly this New York company, small trading company, what they have announced is that this Adani Group have done stock manipulation and stock frauds are done in that company. So suddenly what happens? Adani share value, it got reduced, share price got reduced. So more people fear and they start to sell their shares. And banks also got fear. But banks are telling that we are not in a very critical situation. Anyway, we are also getting affected, but we are not in a very critical situation. Actually, we have given loan to Adani Group, but we have given loan to those Adani's companies, Adani Groups, which have large finance assets with strong cash flows. That is the Adani companies which is having such as like airports and ports, which is having strong cash flows. For that purpose only we have given the loan, so that we won't be affected that much. That was told by the Indian banking industry. Yeah, right. See, in the past 3 years, Adani's debt, borrowings from the banks and markets have increased. That we know that. Bank debt has also got increased. So the percentage of amount which they have borrowed from the bank also got increased. It is more than 25%, but it is below 40%. That is what banks are telling us, that we are not in a very critical situation. We won't impact that much. Then 30th news. Credent Global Finance in talks to raise rupees 500 crore for Tier 2 projects. Yes. Credent Global Finance Company, which is an NBFC company, SEBI registered NBFC company, they are planning to raise 500 crore rupees under alternate investment fund to fund mid-segment real estate projects in the Tier 2 cities. In order to fund the real estate projects in the Tier 2 cities, Credent Global Finance Company is planning to raise 500 crore rupees. Because actually CBRE, world's largest commercial real estate services and investment company, what they have told is that real estate market, that the investment in real estate sector is increasing 32% year on year. That's what told by the world's largest commercial real estate services and investment company, CBRE. What they have told is that Credent Global's director Vishnu Rathore, what he had told is that we are planning to raise 500 crore rupees to fund the real estate projects in the Tier 2 cities. That what told by the Credent Global Finance Company. That's all. January 26, Thursday news we have completed. Now we are going to see January 27, Friday news. 31st news. Dwara Holdings mulls rupees 300 crore fund to support ventures focusing on low income households. Yes. Dwara Holdings, it is a Chennai based company. What they have decided is that they have planned to raise rupees, that is they have planned to fund, give rupees 300 crore to the venture capital companies. To the venture capital companies, that is to the small venture capital companies, that is funding to improve the financial standards, financial wellness of the low income households. So those venture capital companies, those who are funding, that is those who are working to improve the financial standard, financial status of the low income household people, for that venture capital companies, Dwara Holding Companies is planning to give rupees 300 crore rupees fund. That's what they have told in this news article. So this was told by co-founder and executive vice chairman of Dwara Holding, Samir Shah. He is Samir Shah, right? Then 32nd news. India's top bank says Adani exposure within RBI limit, but remain watchful. Previously we have seen, right? So public sector banks, government banks, what they are telling is that yes, we have given loan to the Adani company, but we have given up to the limit which was told by the RBI. We have given exposure to the Adani group by the government banks is within the limit prescribed by the RBI. We are safe only. We are not in a critical situation, because Adani company's share value suddenly got reduced due to an announcement by the US short seller trading company called Hindenburg Research. What they have told is that this Adani company is doing some stock manipulation and stock frauds are going on in the Adani group of companies. So suddenly what happened is that all the shareholders, all the investors in the Adani companies started to sell their shares. Share value got reduced. If the share value got reduced, maybe the Adani company may get default. If the Adani company defaulted, bank would also get defaulted. Right? It may happen, because previously also government banks have given money to many corporate companies, and once the corporate companies get defaulted, banks also suffer. So same as that, what they are asking is that whether the Adani group's share value, if it get reduced, so actually it gets reduced. Adani group's share values decrease, whether it is going to impact the government banks. It is going to impact, but it is not to that extent to worry. Right, because it is within the limits. Actually, RBI had given the limits. A bank should actually, what RBI told is that RBI, Reserve Bank of India, allows for no more than 25% of a bank's available eligible capital base to be exposed to any one group of connected companies. Act is more than 25%. No banks should give loan to the connected companies or any group of companies. That's what insisted by the RBI, and banks are following that. That's why banks are telling that, okay, we are in the safer hand only. We are not going to impact that much. That was told by the government banks of India, that is public sector banks in India. Private banks, we don't have to worry, because total amount 10%, less than 10% only they have given to Adani group of companies. So there is nothing alarming about our Adani exposure. We don't have any concerns, any concerns as of now, told by Dinesh Kumar Kara, who is the chairman of the State Bank of India. So he told that there is nothing to worry. We are in the safer situation only. We don't have any concerns relating to that. That's what told by Dinesh Kumar Kara, sir. He is the person. Then 33rd news. Insurance bill may not be introduced in the budget session. Yes, in the upcoming budget session on February 1, 2023, Nirmala Sitharaman ma'am is going to announce the budget for the next financial year, 2023-24. So in the upcoming budget, whether the insurance laws amendment bill, because the budget session of the parliament, whether insurance laws amendment bill will get passed, will get introduced or not, is what asked by the what asked to the government. What government told is that we are not actually putting on hold to the insurance laws amendment bill. We are not going to pass this insurance laws amendment bill in the budget session. Maybe we will be passing that bill in the upcoming monsoon session or winter session. We may be passing, but a provision relating to this bill, that is a composite license provision, that is a single insurance company could act as a general and health insurance company. For that, a composite license is needed. That composite license provision is included in this amendment bill. That will be discussed in the budget session, but the bill won't be exclusively passed in the budget session. Maybe in the upcoming sessions, maybe it will get passed. It may be introduced later. This is what told by the government officials. Then 34th news. Worst of inflation, growth and currency crisis behind us, Shakti Gandadas sir. So RBI Governor Shakti Gandadas sir, what he told is that yes, we are in the worst situation of the inflation. All over the world, every country is impacted by the inflation. General price level of all goods and commodities got increased. Economic growth got affected. Currency value, it got depreciated in comparison to the US dollars. So to control the inflation, all over the country, actually all over the world, more countries are increasing their interest rate, same as their USA, which is a global economy, major economy throughout the world, major economy in the world. They have also increased their interest rate. US Federal Reserve also increased the interest rate, same as that RBI also increased the interest rate to control the inflation. What RBI governor told is that, is there any possibility in the future to reduce the repo rate? But that what asked to the RBI governor. What RBI governor told is that no, there is no possibility, because this upcoming year, it is going to be, maybe it may be a recession year. Economic growth is slow. Inflation is there, and throughout the country inflation is there. So RBI will definitely increase the repo rate. Maybe in future repo rate may get increased, but it will not suddenly decrease. That what told by the Reserve Bank of India Governor Shakti Gandadas sir. Actually, this is opinion, right? Then 35th news. India's foreign exchange reserve rise by $1.727 billion to $573.727 billion. Yes, foreign exchange reserve of India as of January 20, 2023, it is $573.727 billion. So compared to previous week, January 13, 2023, foreign exchange reserve increased by $1.727 billion. So in that foreign exchange reserve, major component is the foreign currency asset, because in foreign exchange reserve we will be maintaining foreign currency asset. Dollars will be maintaining, gold we will be maintaining it, SDR, special drawing rights, the amount which we have given with the IMF, that will also be counted in the foreign exchange reserve. But the major component in the foreign exchange reserve is foreign currency asset, that is the dollars. That also got increased. Then in foreign currency asset, other than dollars, we will be maintaining euros, pound and yen will also be included in the foreign currency asset. So overall, as of January 20, 2023, foreign exchange reserve is $573.727 billion. Then 36th news. Private equity or venture capital investments declined by a third to $54.2 billion in 2022. Yes, last year investments by venture capital companies and private equity companies in Indian market, it got declined, it gets reduced by nearly $54.2 billion in 2022. That much amount only investment is made in Indian market. Actually venture capital companies and private equity companies, they will be investing more in the Indian economy. That will be called as the funding winter. The investments done by the private equity or venture capital companies in India, it is called as the funding winter. But But after consecutive years of such, continuously for the past 4 to 5 years, private equity investments is increasing in India, but suddenly it gets declined, it gets reduced. Right, that may be due to the reasons for the decline is that may be due to recession, inflation, because Russia-Ukraine war is going on, inflation is there throughout the world, recession, 2023 may be a recession year, rising cost of capital cost is rising for the government, and more levels of uncertainty. Russia-Ukraine war is there, due to the trade gets affected. In China, pandemic wave is again going on. So due to that reason only, private equity or venture capital investments are reducing in India. It was told by a report published by Industry Lobby, IBCA and consultancy firm EY. They have told it. So investments by value also it got decreased by 29%. Value also got decreased. Volume also, the number of companies which are investing in the Indian market, that also got decreased by 4.6%. That's all. We have completed January 27 Friday news. We have finished. Now we are going to see January 28 Saturday news. 37th news. Union Bank takes second shot at selling KSK Mahanadi loan account. Yes. To the KSK Mahanadi company, Mahanadi Power Company, more banks have given the loan. State Bank of India, Punjab National Bank, Bank of Baroda, Axis Bank, they have also given loan. But previously, these banks, State Bank of India, Punjab National Bank, they have already sold their debt. They have already sold their debt in the, they have sold their amount in the KSK Mahanadi Power Company. Union Bank of India, last year in the August month, they have decided to sell this, sell their loan in the KSK Mahanadi Power Company. That is the loan amount of 2,077 crore rupees. But they could not sell it because no people came to buy that loan, because they have fixed the reserve price value as rupees 919 crore reserve price. They have fixed it. Then recovery they have expected around 44%. That's why no people came to buy this Union Bank of India's KSK Mahanadi loan. But now what they have told is that again we are going to sell this KSK Mahanadi loan. So in that loan, we are going to, this time we are going to reduce the reserve price to rupees 828. Then recovery also 40% recovery only we are planning. That's what told by the Union Bank of India. So this time maybe they will be selling their 2,077 crore loan of KSK Mahanadi Power Company. Then 38 news. Over 6 banks joined Grant Thornton in legal fight against Winsome Mehta's. Yes, Grant Thornton. It is a leading auditing and reporting company. Leading accounting and reporting company in US. What they have told is that this Grant Thornton, this company, they have filed a petition. They have filed a case in the London court against Jatin Mehta, who is the important promoter in the Winsome group of companies. Because this Winsome group of companies, that is Winsome Diamond Company, they have defaulted in the year 2013. Like Nirav Modi, Vijay Mallya, Geetanjali Jobs in the 2018-19, they have defaulted, right? They have got loan from the bank and they haven't paid it. They have fled to London. So same as that in the year 2013, Winsome Company's promoter, important promoter, Jatin Mehta sir, he also got the loan amount from the bank, defaulted and went to the London. He is Jatin Mehta sir. So to recover the loan amount given to the Winsome Diamond Company, Winsome group of companies, Grant Thornton Company, leading accounting and reporting company, auditing company, globally, it is a leading company. They have leaded the petition in the London court, and in that petition, the banks which have given loan to the Winsome Diamond Company, that is the Indian banks, half a dozen banks, over 6 banks have given loan to this Winsome Diamond Companies, that is IDBI Bank, Axis Bank, Exim Bank, Bank of Maharashtra, Standard Chartered Bank, State Bank of Mauritius. They have also given the loan amount to the Winsome Mehta Company in the year 2013. So finally, they have also joined with the Grant Thornton and told that better recover the loan amount from this company for us too. So what Grant Thornton is telling is that, okay, anyway, I will be recovering the amount from that company, but you have to pay me the fees. So that's what happened in this, that's what told in this news article. Then 39th news. Bank unions defer 2-day strike originally set for January 30-31. Yes, as usual we have discussed, right? Bank unions, they have UFBU, they have decided to go for strike on January 30 and 31, but now they have decided to push back their strike. They have decided to cancel their strike because Indian Bank Association is going to meet with the union on January 31. So that is the reason they are planning to cancel the strike. The demand for the strike is, see, actually their demands is, as usual we have seen, 5-day banking, updation of the pension scheme, that is restoration of the old pension scheme. Old pension scheme must be restored to the bank employees, because in the old pension scheme, the salary before retirement, the salary amount which they are getting before retirement, from that amount 50% will be paid as pension to the bank employees after retirement also. So that only more and more bank employees and central government, state government employees, they will always be demanding the old pension scheme, because new pension scheme, that is not going to pay the 50% of the last driven salary, right? So again, this union is repeating this demand also: restoration of the old pension scheme, then increasing the wages, salary must be increased, then adequate recruitment in all cadres. So vacancies must be filled in all cadres. So that's what the demand given by this union. But anyway, they have decided to cancel their strike on, which is going to be planned on, which they planned on January 30 and 31. Then 14th news: why is the insurance industry largely silent on 100% FTA demand? Yes, actually this year, February 1, Finance Minister is going to announce the budget for the upcoming financial year 2023-24. In that budget, insurance industries is not pressurizing the government to increase the foreign direct investment limited to 100% from the current 74%, because currently in the insurance industry, FDA is allowed, but up to 74% FDA is allowed. Previously, insurance companies are demanding the government, and they have got the limit increased to 26%. So they have got the limit increased from 26% to 74%. But now, previously, actually, if you see, insurance companies are demanding the government that increase the FDA limit to 100%. But suddenly, this year government is going to announce the budget. But now insurance companies are not pressurizing the government to increase the limit to 74% to 100%, because actually, if you see, insurance limit, that is the FDA limit in the insurance companies, is increased from 26% to 74%. But still, no foreign companies have invested up to 74%. That's why insurance companies are silent this time. Previously, what they have told is that if you are increasing the FDA limit, definitely additional capital will be infused in the insurance companies up to 50,000 crore rupees. So that's why they are insisting the government to increase the FDA limit from 26% to 74%. But again, previously, if you see, insurance companies are demanding the government to increase the FDA limit from 74 to 100%. But suddenly now they are not pressurizing the government. Reason, because 74%, up to 74% itself, no foreign companies are ready to invest. Below 74% only, many foreign companies have invested in the insurance companies. The reason is that domestic promoters, the domestic investors in the insurance companies, they are not selling their share. That is the reason why foreign companies could not invest up to 74% in the insurance company. That's the reason. Even 74% has been a non-starter. That is not even filled. So why is there an urgency to increase that limit to 100%? That's what the point of view of the insurance industry. That's all we have finished. So January 20th Saturday news we have finished. Now we are going to see January 29th Sunday news, last day of this week's news and the last news of this week, 41st news. Punjab and Sindh Bank aims at rupees 500 crore recovery from NPAs in the fourth quarter. It was told by Punjab and Sindh Bank MD Swaroop Kumar Saha sir. Yes, he is the Punjab and Sindh Bank MD Swaroop Kumar Saha sir. What he told is that fourth quarter of this financial year 2022-23, we have planned to recover NPAs. NPAs amounts to 500 crore rupees. So that's how we have planned. We are expected to recover 500 crore rupees in the fourth quarter of this financial year. Previously, in the 3 quarters of this financial year, previously we have recovered around 1,178 crore rupees. We have recovered from the NPA. In the fourth quarter, we are planning to recover around 500 crore rupees from the NPAs. Actually, it is we are planning to recover, and definitely we will recover it, because resolution of Meenakshi Energy Companies, it is also in the final stage. They are planning to sell this Meenakshi Energy Companies loans to the National Asset Reconstruction Company Limited, then Syntex Company, then Sri Resolution Companies, because Sri Group of Companies also they have given the loan. That is also in the final stage of the resolution. So anyway, in the fourth quarter, we will be expecting that we will be recovering around 500 crore rupees from the NPAs. That's what told by the Punjab and Sindh Bank MD Swaroop Kumar Saha sir. Then additionally, he told that we are taking steps to reduce the bad loans. NPAs also we are taking steps to reduce it further. Then we are aiming to maintain the profit growth. Profit also we are maintaining it. We are aiming for the highest profit growth in the upcoming quarters of the financial years too. One more information is that what he told is that the bank will soon start. Soon they are going to appoint a merchant bank. That is Punjab and Sindh Bank, we are performing very well. That's what told by the Punjab and Sindh Bank MD. So soon we are going to appoint a merchant bank which will give us opinion whether Punjab and Sindh Bank could raise funds from equity or bonds. So through equity or bonds, whether Punjab and Sindh Bank could raise funds or not, opinion will be taken from the merchant bank. So soon we are planning to appoint merchant banks. So that information also told by the Punjab and Sindh Bank MD, because Punjab and Sindh Bank, their capital adequacy ratio is high. They are having capital adequacy ratio of 15.57%. So that bank is stable. They are telling that we are stable enough. So we are planning to raise funds through equity and bonds also. Soon we will see whether they are raising it or not. But anyway, in the fourth quarter, they are planning to recover around 500 crore rupees from NPAs. So that's all. January 4th week banking awareness, we have finished. Finally, we have finished. So as usual, what you have to do, in the description box, there is a quiz link. Attend the quiz and check your score. Definitely that will help you to revise the news article what we discussed today in this video, as well as it will help you to boost your score in the bank exams also. Okay, students, if you are liking this initiative, click the like button. If you haven't subscribed to the channel, subscribe to the channel. Share the video with your friends and fellow aspirants if you like it. Okay, students, thank you.